Self-assessment season is upon us, and if you are required to do so, your personal tax return needs to be completed, submitted and paid up by the 31st of January. In this part one of our self-assessment video series, we will cover: do you need to complete and submit a tax return for the 2019-20 tax year? Just because you have done so in the past may not mean that you need to for this tax year. An explanation of the timelines, deadlines and payments, penalties for non or late submission and payment, and finally a 4-step approach you can use to prepare for completing a self-assessment tax return for 2019-20. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all our latest content. This really helps us to produce more helpful videos and to get you free quality advice from real qualified accountants. Do you even need to complete and submit a return for the 2019-20 tax year? Well, this is the first thing you should establish. You may have received a notice to file a return from HMRC, as they believe based on past returns you may have to do one for 2019-20. Here's what you should do as a basic check for yourself. You definitely do not need to file a self-assessment tax return if your only income is your wages, salary or pension, or if you have no income at all. You do need to file a self-assessment tax return if, aside from your income that has been taxed at source, i.e. your wages and salary, you have any other untaxed income, such as money from renting out of property, tips and commissions, income from savings and investments, income from dividends either from your own company or external shareholdings, and foreign income. If you are self-employed as a sole trader and earn more than £1,000 before taking off anything you can claim for tax relief, and if you are a partner in a business partnership, and if you have capital gains in that year. Finally, if you don't meet these criteria, you can still choose to fill in a tax return to claim some income tax reliefs, or prove you're self-employed, for example, to claim tax-free childcare or maternity allowance. We'll go into some more detail about choosing to complete a tax return in our next video, including the benefits this can offer, including possible tax refunds. If you're still not sure you need to file a self-assessment tax return, the best thing to do here is to go to HMRC's check-in tool. It takes about 60 seconds to complete and gives you a steer. Click on the link below in the description box. Let's break this down. The 2019-20 tax year spans from the 6th of April 2019 to the 5th of April 2020. So activity that may give rise to tax during this period is being assessed. If you wanted to do a paper return, then the deadline to do this was the 31st of October 2020. The final deadline to submit an online return for this period is by midnight on the 31st of January 2021, and payment must also be made by the same time. You may have to also make what is known as payments on account. Now, let me explain what this is. Let's say, for example, your tax bill for the 2019-20 tax year amounts to £2,500. HMRC will take this figure and assume your tax bill for next year will be of a similar amount. Because of this, they will then request you to make 2 payments on account or in advance of £1,250 each. The first on the 31st of January 2021 and the second one on the 31st of July 2021. So on the 31st of Jan 2021, you will actually be making a total payment of £3,750 to HMRC. £2,500 for the 2019-20 tax year, and an instalment number 1 of £1,250 for the upcoming 2020-21 tax year assessment. The good news is that this payment on account is used as a credit against your 2020-21 tax bill. So in other words, if your tax bill in 2021 ends up as, say, £3,000, you would already have £2,500 paid on account, and therefore the balancing payment would only be £500. But this is ignoring any further payments on account. Now, there could be penalties and interest in 2 possible scenarios. Number 1, if you send your return late or not at all, regardless of whether there is any tax owing. And number 2, if you pay your tax bill late. In both scenarios, that means after midnight on the 31st of January 2021. Now, let's break this down a little further. If your return itself is submitted 3 months late, so in the period the 1st of Feb 2021 to the 30th of April 2021, then the penalty is a flat fee of £100. After 3 months, so from the 1st of May 2021, if you have still failed to submit your tax return, then a further £10 per day penalty is added up to a maximum of £900 or 90 days. For late payments, the interest is normally 5% of the outstanding tax liability at the date of late payment. You can use the HMRC calculator as a useful tool to help you calculate late submission and payment penalties for more than 3 months. Click on the link below in the description box for more. Now, effectively, you have two choices here. Either you can get a professional to complete and submit your return for you, such as your accountant, or you can do it yourself. Now, if you want to do it yourself and have not done so before in the past, we've put together a 4-point checklist for you to follow. So number 1, if this has not already been done in the past by your accountant, yourself, or anyone else, then you will need to register to submit a return with HMRC. Click on the link below in the description box on how to register. Number 2, once you have registered, you will be sent a unique tax reference number, also known as a UTR. You will need this and cannot complete or submit a return without it. Number 3 is to register for an online government digital account or use a piece of commercial software. Again, there's a link below in the description box for more. Number 4, get all your relevant information together. P60s, payslip statements, property income and expenses, whatever it is you'll be declaring. Get yourself organized up front so the actual process of completing the return is swift and straightforward. Remember, if your return is ever audited or investigated, and it does happen, then you will need to often provide evidence to substantiate any numbers you have put into your return. So our only advice here is don't put anything in your return you cannot back up with evidence. Naturally, depending on how organized your records are, this can be a daunting process. If you're not sure where to start and feel like you may need some help with your self-assessment return, then click on the link below in the description box to head to our website and check out how we can help you. In part 2 of our self-assessment series, we'll go through what happens if you complete and submit your return incorrectly and your calculations are wrong, the pros and cons of using an accountant or equivalent professional service for your self-assessment tax returns, should you choose to complete a self-assessment tax return even if you don't have to, and finally, how much should a self-assessment tax return by an accountant actually cost? I hope this video has helped you to understand the basics of self-assessment and has taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.